Second quarter, we saw our NAV come down by about 9%. So we were very much affected by this turmoil in the markets and the ongoing correction. Our markets, our countries themselves are growing. Our companies are posting very strong results. So again, this is one of those times where Eastern Europe and emerging markets and other perceived risky assets are taking a hit, which is not of their own causing, but is rather caused by the increased risk aversion and nervousness that we see globally. So for us, yes, our NAV was down. At the same time, we made some good exits during the quarter. We exited our position in Wimbledon. We started the quarter actually by exiting partly the Power Utilities Fund and the Special Opportunities Fund. We also received some dividends from our direct holdings, which means that again now we have a lot of cash in the portfolio, and so I look forward with confidence. Obviously now the main theme is what happens in the US, what happens in Eurozone, whether we will see a double dip or whether these economies have enough strength to continue growing, whether these economies and political systems will be able to deal with the challenges facing them about the debts and other things. So clearly these do have an impact, and as we see, this is what the media speaks about, this is what's on top of everyone's minds. So clearly this impacts the sentiment in a very direct way, as well as our markets. For us, again, the fact of the matter is that our companies, most of our companies have strong performance. Our economies are growing. And also for East Capital Explorer, we have cash. So we have now 1/4 of our total assets in cash, which of course enables us to take advantage of these times and these valuations. So our direct investments, Theo is the single largest one today. They paid again a very nice dividend in May. So that company continues to produce very strong cash flows despite the fact that the telecommunications market overall has been declining, and they've seen their top line shrink a little bit. But they have been very good at cutting the costs and maintaining very strong margins. So Theo continues to produce very strong cash flows. Melon Fashin Group, one of our largest investments, also continues to do very well. They are opening more shops, but primarily, as we indicated earlier last year, the focus has now shifted to improving profitability in the company, to improving efficiency, and to get the Ukrainian market, which is a new market that Melon entered last year, to really get that market to also be as successful as Melon is in Russia. Then the third largest direct investment, Komercijalna banka, we increased our position there a little bit also during the quarter, so now we're above 10%. The bank is growing its deposits, the profitability has been good. They also paid a dividend to us in May. So if we look at all of these, the large direct investments, they are all doing quite well. Well, first, utilities sector had very good performance late 2010 and early 2011. So that sector was benefiting from the growing optimism at that time. And then things changed in about March this year, when people started to be more nervous overall, and then particularly for the utilities. I think we have seen an impact from the Russian election year. So there has been a lot more discussion about whether these utilities companies need to be profit oriented or socially oriented. So clearly some investors get worried when they hear these kinds of discussions, and therefore mark down the utilities sector. But from our point of view, this is kind of short-term noise that we don't really think has an impact on the long term. At the same time, we were, I think, very unfortunate that our manager in the fund decided to reduce the size of that fund early in the year. So we were able to lock in gains on a number of these positions and get a significant amount of money back. So we got over 20 million euros back from that fund only. So clearly that was a good time to take profits, as we know now. And now we have that money available to use again. Yes, in July we announced that we have agreed with Swedfund to buy them out. We have always liked Melon Fashin Group a lot. In fact, it's always one of our favorite stories to tell. It is the clear market leader in its sector in Russia, probably the biggest, the most successful retail company in Russia and in Eastern Europe in fashion. So this is a very exciting company. We have also now worked with them a lot to improve governance, so for example at the AGM in May, Connie Carson was elected to the board and became the chairman of Melon Fashin Group. So we have very, very big confidence in this company. They have continued to deliver very good returns. So for us, when the opportunity presented itself to increase our ownership in this exciting company at a very good valuation from our point of view, then of course we took advantage of that opportunity. And now we just have to wait a little bit to get the competition clearance and to clear some other formalities. So within a couple of months, hopefully we will close this deal, and then Melon will be the single largest holding in our portfolio. And clearly, I very much hope that one day Melon is a leading example of a Russian listed company that is known globally by investors that focus on emerging markets and is known as a success story.